Watkins, and I want to welcome you guys to Financial Juneteenth TV. And I wanted to answer a question that I received today. I received this question from one of my stock market students. They couldn't understand, how is the stock market going up when the economy seems to be going down? How is it that the market rallied recently and so much money was made? And you're hearing these terrible unemployment numbers, literally historic levels of unemployment, and just complete total economic chaos as the quarantine has kept people at home. People, can't go to work. Companies can't open, things like that. So let me try to answer that really quickly and break this down for you. The market is rallying largely because the stock market is what is called a forward indicator. A forward indicator in economics is basically something that doesn't tell you about, the way things are now. It tells you more about the way things are expected to be. So when you saw the market rally this month, I think the Dow went up over 20% this month. A lot of my students made a lot of money this month. It went up because there was good news coming out in terms of the ability to control the virus in the quarantine, things like that. And that pretty much let people know that this too shall pass. That basically, this right now, we're kind of hemmed up right now. We can't really do much of anything, but that's going to go away. That's going to pass. And so basically, the really important thing to understand is that the stock market basically calculates itself from looking at all the future cash flows that the companies are going to make, going all the way out to all of eternity, actually, the next 5 years, 10 years, 20 years. And so if you're looking at economic activity now, you're kind of seeing exactly what's happening right now, right? Like they'll tell you exactly how many people are unemployed right now, how many businesses are shut down right now, what companies are earning right now, but the stock market pretty much tells you a little bit about what's happening right now. That does matter. But what's more important is, well, what's going to happen in the future? So, for example, this week you had a major advances on different drugs that have come out to deal with the virus. And so the market was really happy about that. Gilead Sciences, that was one of the stocks. If you go back, you'll know, if you're in my program, you'll know that we talked about Gilead about a month and a half ago, and that company has really done really well since then, because that was one of the companies during my research that I found that was actually doing a lot of great work on this virus. And so they had a breakthrough and the stock skyrocketed. So basically, if you want to know the specifics of this recovery, the typical bear market takes about 14 months actually to hit the actual bottom, and it takes about 2 years to get back to the previous high. I don't think this bear market is going to be that bad because you had a fundamentally strong economy that just had this really weird external disruption that came from this virus. I think that a lot of energy economically and scientifically and otherwise is going to be put toward getting us back to normal as quick as possible. It won't be the same economy. There are going to be some fundamental shifts. So there are a lot of unknowns and unknown unknowns that are going to play a part in all of this. But remember also that just because you had an economic downturn, that doesn't mean everybody was losing money. A lot of people made a lot of money during this downturn, and I can say I can put myself in that category, but it's mainly because I just tend to buy. I just buy consistently. When the market goes up, I buy. When it goes down, I buy. And the long-term trend of the market has always been upward. So a person who buys long-term historically has always been a winner. So that's my 2 cents on it. I see Molly says I made $800 on 5G. Good for you. Positive energy, real talk. Chris says, yes, I've made money this month. Yeah, this was a good month if you were an investor. And so that's why one of the things I would recommend to you guys is however you make your money, add investing into your arsenal of money-making tactics. There are 3 ways that people get rich in America. 1 is investing in the stock market. 2 is buying real estate. And 3 is starting a small business. If you don't want to buy a house yet or don't own any real estate, then that's fine. Get around to it later. If you don't want to run a business, or then maybe you could try to own a piece of a business. That's a great way to make extra money, or a side hustle or something. And then if you can't do either one of those things, or you want to get to those later, buying stock is probably the easiest way to get started on that. The thing is, it's more of a longer term play. You know, the stock market is not a place to get rich quick. It's a place to get rich slowly. And so if you want to learn to buy your first share of stock, just go to firstshareofstock.com. That's firstshareofstock.com. You can learn for free. There's a free training right there. So feel free to go take a look. So anyway, guys, I'm out of here. I hope you guys have a good day, and I hope this answers your question. And I will talk to you soon. Take care. Bye-bye.